Hi, my dear friends. How are you doing? Punarvas Jayakumar here. How are you doing, buddies? Okay. So many of you have been asking me to upload the RTP. So guys, we have already uploaded the revision videos. It's still coming. Totally 10 parts, 10 or 11 parts will be there. Mostly 10 parts. It covers, your entire all the important areas of direct taxes. It is the most exhaustive, most exhaustive revision that you can ever find on YouTube. It is almost 80 plus hours, so you don't have to go for any fast track batch or any of those nonsense. You just do this video. Those of you are studying CA CMA final for November examination, that is my gift to you. Okay. But many of you have also been asking me about the RTP MCQ. At least you solve like that. So I just open the RTP. So we'll just quickly solve. It's a pretty simple RTP, but the thing is, questions are very nice, right? There are good questions. Of course, a couple of case scenarios, and then you have your MCQ questions. So we'll quickly solve this. Apart from that, please go to each and every revision video and check out the timestamp. You will get to know exactly which concept you want, and you can check that. Concept of equalization levy, probably the last time it can come this examination, because there are things that have changed. So what I've done in that fast track, or rather the marathon revision session, is basically taken what all has changed in the new, that is Finance Act 24 also, and I have told you that this is the last time ever it can come, because in Finance Act 24 it has changed. So those things also I have done. So it is very important for you. Apart from the Finance Act 23 amendments, you have also covered the ones which have changed in Finance Act 24. I mean, of course, I have not discussed what changes have come. I have just told this thing has changed, so that you can come back and study this for the last time. So the old provisions, last time ever it will come. Okay. On that note, buddies, let's come. So whenever you're discussing or seeing a case scenario, no, first directly go to the questions and see what they are asking. So obviously, since equalization levy is, completely different in Finance Act 24, obviously for November 24, they should give a question on equalization levy. So this question is on equalization levy. How did I come to know? If you see here, directly they have given advertising services, which are the following equalization levy. So there would be a question on equalization levy. You will, what it is that you will come to know here, and then they are talking about are they associated enterprises? We'll see. And is there any long-term capital gain? That also will check. And yeah, what are the remedies available? So this is regarding your appeals and also your dispute resolution panel under 144C. All that they have given. Let's see, guys. Good question. Trio Incorporated, company incorporated in country T, which is not in India. So it's basically a company incorporated outside India. Is engaged in the manufacture of computer hardware parts. It also owns an online social networking site, Attire. Nice Limited, an Indian company, imports computer hardware parts from Trio Incorporated. So basically, this Nice Limited imports from Trio Incorporated hardware parts. During the previous year 2024, Nice Limited did not import any computer parts from Trio, but paid 5,50,000 on 24 July 2023 to Trio Incorporated for advertising its business on the platform Attire. So guys, they did not import, but they paid for what? Ad services, for advertisement services. However, Nice Limited neither deducted tax at source nor equalization levy on such payment. So basically, Trio Incorporated is a country incorporated outside India. Services are also provided where advertisement etc. is being put on Attire. So it does not have a permanent establishment in India. So the concept of TDS etc. will not come here. Nevertheless, we should see the concept of equalization levy. So as you know, there were two equalization levies that were there, one in 2016 and one more levy in 2020. But this equalization levy, if you see, my dear friends, in our material 12.2, so if you see, yes, residents carrying on business or profession in India, that is, Nice Limited, is paying an aggregate on whatever aggregate amount of consideration exceeding 1 lakh. So what is the amount here in the question? 5,50,000, definitely more than 1 lakh. So yes, you should deduct equalization levy. for sure equalization levy has to be deducted for what? A specified service, which is online advertisement. The non-resident has a PE in India. If he has a PE in India, equalization levy shall not be charged. In this particular case, it does not have a PE in India, hence equalization levy will be charged. Okay. So yes, that is the first part about equalization levy. So this will come under equalization levy 2016. 6% is what you need to charge, my dear friends. It's very simple, 6%. So let us see. The first question here they have asked. Equalization levy is not attracted is wrong. TDS will not come. Penalty. Penalty for not deducting equalization levy. Equalization levy is deductible, but they have not deducted. Very clearly they have given, guys, here. Neither deducted TDS nor deducted equalization levy. For equalization levy not deducted, what is the penalty, my dear friends? As you can see here, penalty for not deducting equalization levy, failure to deduct, is equivalent to the amount of levy he failed to deduct. Deadly. So let us see now in this question. 5,50,000 rupees into 6%. That comes up to how much? 30. So 33,000. So equalization levy of 33,000 is deductible. 33,000 deductible, yes. But then penalty. Penalty for non-deduction would be 33,000. Amount of equalization levy. So guys, option D is the answer. Very, very simple. Section 166 of not Income Tax Act, 166 of Finance Act 2016. Very, mark this as important because in Finance Act 24 things have changed. Okay. Moving on. On 1/4/2023, NICE Limited advanced a loan of 2.5 crore to Xylo Limited. So NICE Limited gave a loan to Xylo Incorporated, Australian company. Book value of assets 4.52 crore. Out of the 10 directors of Xylo, 5 are appointed by NICE Limited. Xylo repaid the entire loan on 31st March 24. So 5 out of 10 directors are controlling. So guys, generally if you want to call anybody an associated enterprise, right? If it's an associated enterprise, so basically not less than 51% of the book value should be there in the other company. And also one more criteria could be that I control the composition of the board of directors. If that board of directors are 10, controlling the composition means at least more than half, so 6 out of 10 directors. But here it's only 5 out of 10 directors. So this part is not there. But we have to see the book value portion. We have to see the book value portion. Book value is how much? 4.52 crores. And what is the loan amount? 2.5 crore. So 2.5 divided by 4.52. So the loan amount, if it is controlling how much? More than 50% of the book value. How much will it come up to? 2.5 divided by 4.52. 55.3%. 55.30% is what I am controlling. So then it will be called as what, guys? Associated enterprise. Correct? So if you see, is NICE Limited and Travel Limited associated enterprise? If so, why? Is it because of composition of board of directors? No. B, they are saying 50% of directors. No, it should not be not less than 50%. It should be more than 50%. This is wrong. This is also wrong, obviously. No is wrong. It has to be yes only. So answer is yes. This one. And the process of elimination also you can do, guys. No problem. Got it? Easy. Second question. Chiller. Next you see. On 9/12/2023, Trio Limited sold 3,500 equity shares held by it in an Indian company for 102 rupees per share. These shares were bought by Trio on 15th April 2011 for 36.40 rupees per share. So the cost of acquisition 36.40, consideration 102. both the purchase and sale are effected through recognized stock exchange, STT is paid. Cool, STT is paid. So whenever STT is paid, and if it is long term, 2012 to now, so it is 112A is what they are asking this question on 112A. Fair market value is 31.1 is 90 rupees per share. So my regular students and fast track students, please remember Arun Jaitley's video, which I prayed in 2018. What happened? Grandfathering rule, right? He introduced where he deleted the concept of the exemption which was there for long-term capital gains, and then he said that look, LTCG will be taxed in excess of 1 lakh rupees at the rate of 10%. And to prevent the market from falling and explain the logic, he brought about the grandfathering rule on 31st First 2018. What was the grandfathering rule? He said, what would you take into consideration in the grandfathering rule? Very simple. He will take first the cost of acquisition, or he will say lower of sale consideration or FMV as on 31/1, and then this I will take whichever is higher. What is cost of acquisition? They have given here 36.40. Sale consideration is how much, guys? 102. What is the FMB? 90 rupees per share. This or this, whichever is lesser, this or this, whichever is higher, this. So 90 rupees you should take as cost of, the entire cost of acquisition, so to speak. Then if you apply, you will get the answer. So what is it sold for? 3,500 equity shares are 102 rupees per share. So here, they are asking for the capital gain. It is under 112A only. So how much, guys? 3,500 shares into 102. How much will it come up to? 3,500 into 102. 3,57,000 rupees. Less cost of acquisition. That is 3,500 shares into 90. We computed 90 because of the grandfathering rule. So 3,500 into 90. 3,15,000, guys. So how much is the capital gain? 42,000. Only in excess of 1 lakh is taxable. 42,000 not taxable. So 40,000 is correct. But what would be the answer? Same would be taxable? No. No capital gain would arise. That's the correct answer. But is it because of cost of acquisition 102? No. Wrong. 20%? No. So this is the correct answer. Said amount will not be subject to any tax. Very simple. Which of the following statements are correct in relation to remedies available to NICE Limited under the Income Tax Act if it is not satisfied with the draft order passed by the assessing officer? So they are saying if you have an issue with the associated enterprise or whatever it is, you can apply to the dispute resolution panel, DRP, under 144C. So the draft order, it could be for foreign company or other cases. In this case, other case is Indian SC for TPO cases under 92CA. So in this case, SSC will get the draft assessment order, and then I can either keep quiet and directly go to Commissioner of I can ignore about it and go to Commissioner of Income Tax Appeals, or I can give my objections to the DRP. Then it will go to various couple of panels, and finally, whatever decision they pass, I can go to the ITAT. So I have two options available. I can go to ITAT after following this procedure under 144C, or I can ignore this 144C and directly go to Commissioner of Income Tax Appeals. We have discussed in class, right? So taking that into account, this also you can do, this also you can do. So it's either A or B. You cannot do both. Either A or B is the answer. Either A or B. Perfect. So that is first question scenario. Very, very simple scenario, guys. This is important because equalization, levy and all will definitely come in the examination as I have told, right? Moving on, my dear friends. Next question. Mr. Bhuvan places bulk order on ABC Marketplace Limited, an e-commerce operator for buying 100 toasters. Product listed by DF Seller, a partnership firm. So a partnership firm has listed its toasters on ABC Marketplace. Marketplace acts as buyer side e-commerce for Bhuvan as well as seller. So Bhuvan is the buyer. He is buying the toasters from ABC Marketplace, and this is like an intermediary between the two. Charges a convenience fee of 10 rupees per toaster to DF Seller. DF Seller, that is my partnership firm, DF. Process the order and charges the buyer 1170 per toaster, including packaging, shipping, convenience fee. DF Seller pays XYZ Logistics 5 rupees per toaster for shipping, MNO Retail 15 rupees for packaging, convenience fee 10 rupees. Raises the invoice of 1170 per toaster. So guys, ultimately invoice is 1170 per toaster. But the other things they are only paying. Logistics 5 rupees per toaster, 15 rupees per toaster, convenience fee 10 rupees per toaster. All these things are what? All these things are just money. That is the expenses. Who is bearing? DF Seller is bearing. So ultimately all this is immaterial because they are asking how much is the invoice that they'll raise, 1170, because they are clearly that is including all these things, right? Charges the buyer 1170 including packaging and all those things. So basically they have these costs etc. are not extra. They are all embedded inside this anyway. So this is just immaterial because I need to see what I am billing the final customer. Mr. Sarthak placed an order for 500 decor wall clocks. So that's a different thing. So this is one part, guys. Bhuvan. So in this case, which section will come? TDS section is what they are asking. As per which section? 194O, right? Payment of an amount of e-commerce operator to e-commerce participant. They have given this question because in Finance Act 24, the rate has been changed. So for Finance Act 23, rate is 1% on the gross sales. Who is the payer? E-commerce operator. In this example, ABC. Who is the payee? Resident e-commerce person. Participant, that is the seller. In this case, that partnership firm. Amount paid towards sale or provision of goods or services or both. 1% on the gross sales is what you have to do. If you give PAN, if you don't give PAN, 5% it will be. Yes. So if you make a payment directly to buyer makes a payment directly to seller or through some razor pay, your other intermediary, then it is not going to work. But what about a case where there is Chroma, where it has Chroma's own collection plus collection from other people as well? So that also will be taken into account in this question. It's there. If you see the second part, that is basically your open network for digital commerce. You would have seen Chroma, right? In Chroma, they'll sell Tata products also, they'll sell other products also. So Mr. Sarthak has placed an order for 500 decor wall clocks on open network for digital commerce. These clocks are listed and owned by ABC Marketplace. See? So if you see, even Amazon owns certain products. It is done through a company called Cloudtail. Next time when you're buying on Amazon, check for Cloudtail. Cloudtail belongs to Amazon. So they also own their own thing. So will they pay TDS to themselves? They are only the seller, they are only the intermediary. No. Mr. Sarthak made a payment of 665 wall clock on ONDC platform via Paytm. ONDC credited 655 per wall clock after deducting its convenience fee to ABC Marketplace. ABC Marketplace is the owner. And also the marketplace, basically. Next. Invoice of 665 for wall clock, including shipping cost, etc. and convenience, all that debt. One by one. Is there any tax required to be deducted in respect of order placed by Bhuvan? So they're talking about Bhuvan here. Yes. Is it required, guys? Yes. How much? 100 toasters into 1170. Of that, 1% will be 1170 only. 1% of the gross sales, gross amount. So yes, since it is 1,17,000, what is 1%? 1170. Is there any tax required to be deducted in respect of order placed by Mr. Bhuvan? Yes. 1170 is required to be deducted by whom? By obviously ABC Marketplace Limited. Would your answer to MCQ 5 be different in respect of an order placed by Mr. Bhuvan if it is assumed that DEF seller is an individual and this is the only sales order received? So guys, for an individual, there is one option here you see in question number 5, fourth option. No tax is required if the order value does not exceed 5 lakhs. So guys, as you know that 5 lakhs benefit is only given for whom? Individual or HF, not partnership firm, where the gross amount does not exceed 5 lakh and they should have taken the PAN or other number. So this one, 1170, will you need tax for that? Will you have to deduct tax for that? Not needed. So it says DF seller is an individual and this is the only sales order received on ABC Marketplace is what they are saying. I told you individual HF, sales is less than or equal to 5 lakh, then only no TDS. Sorry guys, some technical problem. Okay, so is tax needed to be deducted or not required to be deducted? As I told you, it comes under the exemption. So tax is not required to be deducted in this case. If it is through ONDC, is there any tax required to be deducted in respect of order placed by Sarthak? Yes. If yes, by whom? So guys, ABC Marketplace only is selling. They cannot deduct tax themselves. ABC Marketplace is not Nityananda. Me deducting tax for a product manufactured by me, sold by me, to me. No, that will not work. Yes or no? So here if you see, so what is that? 1%. How much is it? Made a payment of 665. So 665 into 500. This one. 665 rupees to 500 into 1%. It will coming up to 3325. It is not by ABC Marketplace, guys. This is ONDC. ONDC has to do the needful. Assume that Mr. Bhuvan replaced 5 toasters and returned 5 toasters out of 100 toasters. What would be the adjustment of tax deduction in respect of these toasters? Guys, if it is replacement, then nothing. But if I am returning, then only adjustment will be there, no, obviously. So you see, so it's there in the circular where they have told about the returns and replacements and we have discussed in class. So, right. So in that particular case, what we should do, if you are returning stuff, right, then returning means where money will be, refund will be granted. If it is just replacement, then refund will not be granted. So if you see, no adjustment is required for tax and replaced, the amount of tax deducted would be refunded to DF seller. No, that will be adjusted, not refunded. No adjustment, no, both will not be refunded. So option C, guys. No adjustment is required for tax in replace because old is going, new is coming back. But if it is on the toasters, amount of tax deducted on toasters, returned toasters, for that will be adjusted against the next sale. So option C would be the correct answer there. Assume that ABC Marketplace Limited provides a discount of 10 rupees to both Bhuvan and Mr. Sarthak on sale of toasters and wall clocks. Is there any tax required to be deducted at source? If yes, on what amount it is deductible? Guys, this is very simple. In Bhuvan's case, correct? In Bhuvan's case, who is providing the discount? ABC Marketplace is providing the discount. Like if I sell to, generally we also sell classes, right? Through various vendors. So vendor is like ABC Marketplace. I tell the vendor, boss, you sell my classes, your cut is 20%. That's it. You sell 80% to me, 20% to you. In that 20%, whatever you want, you do. When you are selling, you can give discount of 5%, 6%, 10%, 12%. I don't care. So now tell me, if that is the case, where I am telling that, when I am giving the discount, that is for Bhuvan, the seller is different and the marketplace is different. Marketplace is giving the discount. So do you really think the seller, there should be adjustment with respect to the discount? No. Seller will tell, bro, I need the full amount. I don't care, I need the full amount. In this, what is the full amount? 1170 I am billing, bro. Please give me full 1170 into 100. Full amount, 1,17,000 you pay me, there's no deduction. Right? You deduct the tax on that, but there's no subtraction of the full amount, is what they are saying. So, what amount tax is deductible? There is no discount. For Bhuvan, 100 into 1170, 1,17,000, no questions asked. Because I am not bearing the discount. In the other case, Sarthak's case, ABC only is the owner. They are only bearing the discount. So obviously in that case, 665 rupees was there, no? 10 rupees discount they are bearing. 10 rupees discount. So for that 10 rupees discount, what I should do? 665, 10 rupees, 655 I am selling, I am only bearing. So since I am bearing that discount, definitely I have to reduce the discount. So 500 units into 655. That is 655 into 500, 3,27,500. For that will be the discounted rate. So what is the answer? See. Yes. On 1,17,000 for sale on toasters and on 3,27,000 for wall clocks. This is the deductible amount. Deductible amount. Very simple. Moving on, guys. Then you have the standalone questions. Dynamic Limited is an Indian company, took a lease on commercial premises for its operation. So lease rental, whenever I pay, it will be deductible expense under 3237. After some years, the company decided to vacate the premise, relocate to new location. Our disputes arose to the lessor regarding terms of vacating. To resolve the dispute and avoid prolonged litigation, agreed not to claim the security deposit of 3.4 crore. So guys, initially I would have paid you a deposit of 3.4 crore. That is obviously a capital expenditure. And now I have to receive that capital expenditure back. That will be a capital receipt. But they said, I don't want only, leave it. No problem. Whether the allowable amount of security deposit foregone by Dynamic Limited is allowable as a deduction. No guys, it's a pure capital loss. Initially when I paid only, that is not allowed. Capital loss is also not allowed as a deduction. Over 5 years and all is wrong. Income of lessor and all allowed or deserved. No, not at all allowed, guys. So option B. Because it is capital loss. Next. Let's see. Satya Trust, public charitable trust registered under 12 AB of the Income Tax Act, runs a hospital for treatment of various diseases. Shaurya, son of Mr. Neeraj, the founder of this trust, admitted to the hospital. Son was admitted to the hospital. Total fee of 3.6 lakhs against 7.4 lakhs. So around 2.8 lakhs, like a discount they have given. Charged by the hospital of similar treatment. Board of Trustees of the opinion that the account of providing this benefit to Mr. Neeraj, registration can be cancelled. So guys, we had seen charitable trust. Cancellation of registration is for other sources, other things, committing fraud, diverting the money elsewhere, those things, not giving discount as such. So will you deny the entire exemption based on this one thing of small amount of 2.8 lakhs that you have done? No. But the extent of benefit will be treated as an income that we had seen in charitable organization, charitable trust taxation. Registration can be cancelled is wrong. No, registration cannot be cancelled. Value of benefit would be deemed as income of the trust. No, registration cannot be cancelled. Entire income is eligible for exemption. No. Exemption will be denied to the trust in respect of entire income. Again, no. Only the value of benefit, the 2.8 lakhs, whatever, that will be deemed to be the income of the trust is the correct answer. Option D. We had discussed in charitable trust, guys. Kindly note. Mr. Aviral opened a bank account in country R. On 1/7/2020, he has made deposits of foreign currency equivalent to 5 lakh. On 1/7/2020, 7 lakh. This is in July. This is in October. 12 lakh. 25 lakh in April. The deposit of 12 lakh is made out of the withdrawal of earlier deposits. Okay. So these two, no, I have first deposited, withdrawn it. 12 lakh I have withdrawn. Then again I have deposited it. So should I take it twice? No, only once. Further, out of the 25 lakhs deposited by him, withdrew 2 lakhs. Value of an undisclosed asset in the form of bank account or black money will be taken as. So much will it be, guys? Black Money Act. So what, as per the black money imposition, undisclosed foreign income and assets and imposition of tax act, if you have deposited the money and withdrawn that money and then redeposited it, that will not be counted twice. It will be only counted once. So 25 plus 12 minus 12. Or will you do 35 plus 12? That's it. What is the further balance that you will take? Guys, I have first put 25 plus 12, 37 lakhs I have put in. I have removed 12 lakhs. And again I put that 12 lakhs back. So you cannot count that twice. Please don't do it 25 plus 12 minus 12. That and all don't do. What is the overall amount I put? 37 lakhs. But in that I have removed 12 and again put that 12 back. So overall it is not 25 plus 12 plus 7 plus 5. It is 25 plus 12, 37. This has to be ignored because this 12 is the same. Take it once. Don't make it 25 plus 12 minus 12. And 25 lakhs is, and thankfully option only is not there, but don't do all those things. So yes. Withdrew the amount on the day 1/3. Yeah. If you withdraw for other purpose, I don't care. What is the value that I'll take? Undisclosed asset. That is the overall amount that was deposited into it, not withdrawn. What was deposited? 25 plus 12. 37 lakhs. Simple. So this is a full-fledged problem. One more question. That is G. G Limited is a resident Indian company. On 1/4/23 it has borrowed 80 crore from Messrs M Incorporated, a company incorporated in country F. So okay, let's see. G Limited is at the center. Whenever any doubt comes, draw a figure, guys. It becomes very easy. Resident Indian company. $80 crores from Messrs M Incorporated has given this company 80 crore. This is some random company, country F, foreign company. interest rate of 8% per annum. Said loan is repayable over a period of 12 years. Further, loan is guaranteed by Messrs A Incorporated in country F. So, this loan, who has given the guarantee of that loan? Messrs A. Has given a guarantee on behalf of G Limited. So, M Incorporated gave me 80 crores, but the guarantee is given by Messrs A Limited. Messrs C Incorporated non-resident hold shares carrying 40% of voting power both in G Limited and A Incorporated. So Messrs C has 40% in this and 40% in this. Simple. Messrs C Incorporated has also deposited 80 crore with Messrs M Incorporated. C Incorporated has also deposited full cross connection 80 CR. There is a scene. Messrs M Incorporated. Correct. So they have given to Messrs M. C has given to M. Interest payable by G to M Incorporated would be subject to limitation of interest deduction. This is 94B section, guys. 94B. 94B. So we had discussed an associate enterprise outside India prefers to give debt instead of equity to Indian associate enterprise to reduce its total income. In order to avoid the shifting of profits, 94B has been inserted to provide that interest expenses claimed by an entity to its AE shall not be deducted in computation of interest, the business of excess interest. Excess interest is not allowed under limitation of interest concept. So here is the borrower an Indian company. We have to see first of all this one borrower, is it an Indian company? Yes, 80 crore it is doing. Does the interest paid to non-resident exceed 1 crore? 80 crore, 8% is how much? Definitely 6.4 crore. Definitely it increases beyond 1 crore. Excess interest is not allowable. Excess interest is what? Total interest paid or payable in excess of 30% of EBITDA to AE. But then, first of all, one part is it should be this. Second is it should be an associated enterprise. So if you see, since Messrs C is controlling 40% in this company and in A Limited, that definitely would be associated enterprise. But just because you are associated enterprise doesn't make it reduction of interest. The amount payable also should be more than 1 CR. So both conditions must be satisfied. So let's see the question now. Messrs C holds 40% voting power in G. This is not the criteria alone. Because of this, if it has given 180 crore for which 8%, that is more than 1 crore interest is there, only then there is an exception. So 1 and 4 should be read together here. Next, C also holds 40% in both G and A Limited. Okay, that can make it associated enterprise. But since the guarantee is also there, loan taken, this is again interest rate is more than 1 crore. So this point also will come. So it is not both A and B. 1 and 3 is a illogical thing. because here C is not covered only. Here C is there. Which would be the same company. So guys, it would be what? Either A or B. Very simple. So this completes, my dear friends, the RTP discussion. The other things we will see later, and I have already uploaded the entire revision of direct taxes. So please put in the comments what do you think about it. What else should I do? You want something else? You want me to do MCQs? You want me to do any other questions? In the, what do you say? Revision, I have done lot of questions also for your information. Please go through that, guys. I'm always here with you. Don't worry. Come on, up top, all of you. Yes, fist bump. Easy. Guys, many people have made DT very tough. I don't know why, whether to sell classes or whatever may be the reason. It's actually very easy. Direct taxes is very easy. Do not have any preconceived notion. Do not think that it is tough and all that. It's very, very simple. All you need to do is work hard and just concentrate. So please do the free revision classes I've already uploaded. Thoroughly do the ATRs, and I'll also see why you will not get 60, 70 plus. Okay. Cheers, guys. Love you all. Take care.